Samir,
Morning.
congratulations on this third year of the event. Digital Fifth is emerging slowly as one of the very credible forces in financial services.
Thank you. Thank you. And I think I'll be honest, the kind of encouragement we get from the leadership side is amazingly good. A lot of what we do is based on what support and guidance we get from all of you, right? Thank you, Anjani.
Oh, this is a great service to the banking industry. I think you are doing a yeoman job. Thank you.
Thank you. So I think from a topic perspective, we were trying to figure out where digital lending goes. And we know how, as a bank, you are going digital as well. So I wanted to hear from you your vision of digital lending. And also from a P&L perspective, business perspective, what do you see are the contribution which will happen on the digital channels on the P&L of the bank? I'm trying to talk about more digital lending, but you can talk about generic as well.
So digital lending is a very, very important pillar of financial inclusion. And the way we look at it is that ideally, as a regulated entity and as a bank, we should be able to extend lending or responsible lending to any citizen in the country, no matter where they are. They need not be asked too many questions. They need not be asked to come and visit a branch. They should be able to get lending support from any regulated entity around the country very seamlessly. So today where we are, given the digital public infrastructure which is available, a lot of onboarding is already digital. If you look at, for a bank like ours, 99% of our lending journeys are digital. That means
99%?
99%. This means it is paperless. It doesn't mean that there is zero touch on operations or zero touch on credit or zero touch on collections. So it is digital in nature, but it still has some touch. And that touch is essentially because we've not done a good job of digitizing it. If we had done a fantastic job of digitizing it, then ideally the entire process should have been STP 100%. And that is where a lot of reimagination is going on. How do we ensure that credit underwriting is fully digital? How do we ensure that there is no failure and therefore no operations touch is needed? How do we ensure that dispersal is instant? How do we ensure that collections is set on an autopilot mode where people who are taking lending are able to pay back? And that is where, as a bank, we are focused on making this entire process completely instant and seamless. We pioneered this for ETB lending, and we called it 10-second loan.
I think 10 years back you did it, and everybody was talking about it, that apne try kiya aur mil gaya, right? It was that good.
Correct. But that is only for ETB customers. Can this magic be replicated for new-to-bank customer? That's where the entire focus is at this point of time. The good news is that the way our country is creating digital public infrastructure, a lot of this is going to be feasible very soon. For example, with DPI, if you look at it, the entire onboarding process, which requires a KYC of a customer to be done, it is almost completely STP. It requires still VSIP where there is a human touch, whether it is on video call or in person. But some of that also can be challenged to see how technology can solve that. But if onboarding with KYC is digital, credit underwriting is completely digital using the various credit capabilities that are coming into market, including the ones where AI is being leveraged significantly. We should be in a position to disburse loans to customers, to majority of customers, I wouldn't say all, but to majority of customers seamlessly like a 10-second loan.
No, I think I do agree. The 10-second loan, what you have is spectacular, and I think a lot of ecosystem players have replicated that. I think the second side which you are solving for, I'm sure all of us are also solving in the market. It's tougher one to solve, which is NTB, right? And I think that's a journey which I'm sure once you build for the ecosystem, everybody will go ahead and sort of learned from. Thank you. Thank you.
Though there is a catch also where, this has to be responsible lending.
Yeah.
See, the easier you make it, it's very easy for anybody to take that loan as well. Now, the question comes in, is this a responsible lending? We've seen a lot of people take credit for consumption, which ideally, if they would not have taken, they would have been much better off. There are people who are buying, let's say, mobile phones, which goes way beyond their ability to pay back. Now, the flip side is that we need to be careful that while this is going to extend the reach of lending all across immediately, it has to be done in a responsible manner. It's not that just to get scale, we can offer every person all types of lending, irrespective of who they are, can they pay it or not, is it going to be good for them? So that responsibility still lies with the sector.
No, this is good. This is good. So I think from a operations perspective, how do you run from backend? So we talk about physical front end, saying that we should have this journey. Maybe underwriting is strict, but which everybody is solving for on digital way. But how would the operations work? How will the bank work? Because it works in a one particular way right now. What will be the new generation, new world look like in the backside, right? So again, the point is, many of you will say, I mean, if I look at my kid, she will say when she was younger that ATM से पैसा निकलता है निकाल लाओ, right? अब उसके backend का operations किसको क्या ही मालूम होगा, right? कहाँ से पैसा आता है? So it's a lot of backend work is very complicated. So you want to talk a quick one on that?
Yeah. So see, our philosophy is that if the journey is really seamless and there is zero failure, ideally you don't need operations. But that is not the reality. Even when you take money out of ATMs, there is a reconciliation that happens across multiple ATMs. Did the customers get the cash or not? And we do find discrepancies over there. That is why operations as an entity is required across all the journeys. Now, the more we become good at it, the more we ensure that the resilience is there, accuracy is there, timeliness is there, operations support will slowly become a tech-driven agenda. And a lot of banks have started on that path already. Many started a long time ago as RPA, but that is a different way of solving the problem. Today, we need to solve it right at the front end when we are designing various journeys. We need to ensure that it is baked in, that should there be a failure, what is the way to recover that? And if that can be baked in, then a lot of that RPA work that goes on later may not be necessary. And today, frankly, technology is available to do that. We just need to reimagine how to do it and implement it and ensure that it is working always. So ideally, there will be, entire journey running with one lever. You switch it on, lending is going on, and there is a dog who ensures that nobody touches that lever. And if there is a failure, then we have to, even the recovery happens using technology.
No, this is good. And if you have questions, maybe we will just get maybe some of you get your questions ready. We will plan maybe, I'll ask me one or two more questions and we'll come to you. We'll give you 10 minutes to ask those questions. I think in terms of partnership between banks, NBFCs and fintechs, what are the best models you have seen which works really well? And also, co-lending has become a large thing, so maybe a quick view on that will be helpful.
So thankfully, the regulatory clarity is completely there on partnership agenda. Today, there are 3 models for partnership. One, a fintech can partner with a regulated entity as a technology service provider. So if you believe that there is a very good technology which can disrupt lending or which makes it easier, it resolves any of the friction points, whether it is underwriting, operations, disbursal, KYC. You can offer that to any regulated entity as a technology service provider. So that's one model. The second model is as a distribution partner. And this has taken multiple routes now. One is essentially a bilateral arrangement where a bank can partner with any fintech or any kind of a consumer company which has the ability to reach out to customers. The other is using the national infrastructure which is getting created, whether you call it OCEN, ONDC. You can be a part on that network as a loan service provider, and you are able to extend that. But in all these cases, the real elephant in the room is who owns the customer. And there, the regulatory clarity is absolutely there, that if a bank is lending or an NBFC is lending, the regulated entity has to be responsible, that that loan is going in the right manner to the right set of customers, and the collection lifecycle management is happening in a responsible manner. You are not in a position to say that I want to remonetize this customer, I want to look at the data, can I sell a refrigerator to this customer, can I sell a washing machine to this customer? Those things are not permitted. Should you wish to own the customer experience and the customer data, then the only way is to become regulated and do that. So NBFCs can do it. There are multiple other ways to get regulated and offer services. So that's the third model which is available. Now co-lending is a model that is somewhere in between here. So this is being done largely to understand how can actually the fintech ecosystem play on the entire lending journey and share the risk in some manner. This requires some degree of clarity even more. I know some of the banks had started it and paused at some point of time, including us. We had done a partnership more to learn how this model is working. And there are some clarities which are needed. For example, the first clarity is that this, just like there is a technology service provider, there is a loan service provider. That loan service provider is extending the capital which is available with the regulated entity to various citizens across the country. So you are offering that same loan, you are managing the life cycle management, collections, etc. So it's a service which is being provided, and that's why the term loan service provider is being used. And for that service, there has to be a fee that has to go from regulated entity to the LSP. There are taxation clarities which are being sought. I don't want to get into that, but you are aware of it. Some of those clarities, when it comes in, I think this whole model will get a more impetus as we go forward.
Maybe just I'm using one more question, which is very personal question. Okay, I've not. So this is off the script. How does it feel to you not? So you must be looking at kya puchne wala hai, right? So you not worked. I mean, from directly getting into a role of a CDO of the largest bank. How has been the experience?
See, I come from telecom. It's a personal question, so I'll take it personally. I come from telecom sector. Frankly, if I look at the company that I'm coming from, Airtel and HDFC Bank, the journey has been very similar. Both the companies were born around 94, 95. One got license in a telecom sector, the other got license in a banking sector. Both rose to the top of the league in their own way. Largely Indian companies getting some of the bright minds together, trying to solve it. Both reached their own heights. But in telecom, there was a huge amount of disruption. At one point of time, we had about 16, 17 telecom companies. And then a huge disruption happened. Finally, just 3 survived. That kind of disruption hasn't come here. But the companies are on their toes to ensure that they become more efficient and better. And the only, I would say the common thread that I see is that technology has been a big enabler and a differentiator in both the sectors. Banking is also something where technology can be used in a very strong manner to offer banking products and services and extend the reach significantly from where we are.
No, this is extremely good. I think I was shuddered to come into your role ever. And I have worked in 30 years in this business. So I think you're doing I think I would say mind-boggling work, amazing stuff. So difficult to run such a large bank. Thank you.
Thank you, but I think there is a team which has been doing it. 10-second loan was not pioneered when I came here. It was already there. It's just that we need to take the good things and extend it going forward.
Excellent, excellent. So we'll take some questions from the group here. Yeah, please.
Thanks a lot, Anjani, for wonderful insights. Here. So on digital lending, Even with the account aggregator in force for the last 3-4 years already, most of the top 4-5 private banks still do take pride in doing cross-sell of credit card and personal loan to the existing customers and not to the new to bank customers. When with the account aggregator, you can get the same information which you might have for your existing customers. And on the related question, though there are so many initiatives on the through the OKN and ONDC for the digital lending, nothing on the liability side. Probably regulator is not comfortable with getting liabilities raised outside the banking system. So if you can touch both the points, thank you.
So account aggregator is open data ecosystem, which was implemented in rest of the world a little earlier, especially in Europe. And we have just started over the last few years. Just because there is an account aggregator doesn't mean that the banks will necessarily go and lend to NTB customers. NTB customer lending is a priority, but account aggregator ensures that you get the information about the customer, which was earlier coming from, let's say, bureaus as well. Here you have the bank statement, etc., available. But the credit underwriting capability is left to the banks. You know, every bank has its own secret sauce. They are going to use that and decide who to lend, who not to lend. It is not that banks would only want to lend to ETB customers or only want to lend to NTB customer. In case of ETB customers, there are some things which are already taken care of. For example, underwriting is of course coming from account aggregator or internal bank statements. But KYC is a big one. If a customer already has an account with a bank, then you don't need to necessarily do another round of KYC. So know your customer is taken care of. The data comes either from internal sources or external sources, which can be any of the DPIs or including account aggregator. That data comes in, underwriting is done, and then dispersal happens. It is just that for ETB customer, this entire rail works more smoothly. Therefore, you see that a lot of banks would be able to do that much better and faster. But there is no bias or preference around that area.
Yeah, maybe we have time for 1 or 2 more questions.
Hi, sir. I'm Kevin from Venture Technologies. My question to you is ULI the promised land, or HDFC being the mammoth you guys are and the trendsetter you are? So what are your initiatives under the ULI perspective?
So we are using the ULI is actually a source for a lot of alternate data that comes in. So land record is coming in. There is a lot of payment data which is possible through ULI. See, alternate data is very important for credit underwriting as well as for multiple other purposes also. For example, even you had asked a question about liabilities. When we onboard a new customer, we have to do KYC. And over there, if I already know that XYZ person has been paying, let's say, your electricity bill for your home for the last 10 years, every month you've been paying, and this payment data is made available, it helps us improve the KYC capability digitally. So ULI is yet another very strong way of getting alternate data. Frankly, we have not used alternate data in a big way. I think there is a lot of opportunity to simplify banking using alternate data, whether it is KYC, underwriting, operations, dispersal, a lot of areas it can impact.
Thanks.
Yeah, we can take maybe 1 or 2 more questions. There you are.
So you've done a great job on the SME lending side, especially in terms of turnaround time, etc. But what do you see going forward as initiatives to reduce turnaround time? Those are still some challenges that exist. I know you covered alternate data, but any other thoughts on TAT reduction there?
So I'm going to, quote Sharad Sharma from iSpirit on this. With all the good work that we have done so far, the idea is to reduce the lending quantum for a smaller period of time to any SME in the country. So if you look at it, what have we done so far? With all the DPIs, everything which is possible, we have been able to ensure that we are able to lend about ₹1 lakh for 1 year in a viable manner so far. Can we bring it down to 10,000 rupees for a month? Can it be done viably or not? This is a challenge that we all are facing every day. What else can we do to optimize lending? What else can we do to improve TAT? What else can we do to improve the first time right of all these lending? That is where there is lot of room for improvement everywhere, right from onboarding, credit underwriting, dispersal. The bar is very high still. Not very many SMEs will be able to jump across. If we bring this down, that you can lend actually 10,000 rupees to any small enterprise, even for a month, and that can be done viably, and collect as well, that is going to change the landscape. So we have a long way to go collectively here. So a lot of you are from financial services sector, all parts of it, whether it is technology, fintech, regulated entities. The game is wide open. We need to do a lot more to bring this down.
Thank you, Anjani. And I think just to realize, you were exactly on the moment it becomes zero, you actually stopped. So thank you, Anjani. It was amazing, and the fact that you have been supporting and joining this event has really helped, right? I mean, if you look in the morning at 9:30 or 10, you have that many people joining us. So that's your star power. Thank you, thank you.
This is lovely. Thank you so much. Thank you.
Thank you so much, Mr. Rathor. It's such a pleasure having you with us at this beautiful forum called Bharat FinTech Summit. May we please present a token of our appreciation to you. Ladies and gentlemen, let's have a huge round of applause for Mr. Anjani Rathor. Thank you, Samir.